Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, most weeks, Monday through Thursday, live at 9 o'clock Eastern Time, and archived on YouTube.com under the channel A Little. You can find me there on any shows that you miss. Of course, we were off air Sunday and Monday, so tonight we're going to do a little bit of kind of a weekly / daily TA wrap to get back up to speed. But let's start with the ending numbers for today to get us going here. Industrial's down 30, a little bit over 0.18. S&P's basically flat. 2002 still over 2000 number. This is like 5 days of hanging now. And the strength of, again, over in the composite's up almost 0.4, the NDX up 0.3, the Russell up 0.45. That's where the strength was. It's over in the OTC issues. And then we had huge weakness in the commodity sectors, in the bond sectors, elsewhere. I mean, it was if you weren't in equities, you got hurt. Gold down 2.2, 1.78%. The IEF down 0.64. The TLT drops 1.75%, 2 points, full 2 points. UNL gets crushed, 3.07% down, and the dollar stronger by 0.32. So, well, actually it wasn't just gold, it was silver as well, and the oil, of course, also down. So it was pretty much, sell the commodities, sell bonds, buy equities, or at least rotate inside the equities. So that's kind of what was happening today. If we pop over and start looking at some of the charts here, let's go right to the S&P 500 to start with. So we're going to start seeing some volume come back into this week. In particular, we'll see more of it tomorrow. We've had that, month and a half now of no volume other than the escalation when we came down. But since then, the last 25 days or whatever it is here, 20 days probably, is actually quite not that much, it's about 15, has been straight up, and it's been on lower and lower volume as the summer edged on out for 2014. So here we are at the top, volume expands, we test the top, 2005.04, we get to 2006.12, so we go over, back under, but we have more volume. More than likely we're going to test it again tomorrow. That's the way this thing is set up here, is to do more testing. And if you look at it on a weekly, yeah, volume just tailing off as we go up, the width of the bar is getting smaller, everything getting tighter. Yeah, it sure looks tired. But you know what, folks? It still hasn't given it up. If we look at the Dow Jones on a daily test down underneath the bar from Thursday, has a greater volume, test over the bar from Friday on less volume. That suggests the Dow is going to try to trade back down. So it looks like to me what we're probably going to see is some sort of an attempt early tomorrow to take it higher that probably fails in terms of the listed issues and starts to pull them down again. Now if we go over where the strength was, and we can look at the NASDAQ first, NASDAQ just climbs again, volume expands, pushing higher, ABCD structure up now. This thing looks bullish as bullish as you can get. So absolutely nothing bad there. If you look at it on the weekly looks more like the Dow, and the S&P is just climbing and running out of juice, it looks like. But on the daily, it certainly looks strong. The NDX, same sort of picture, pushes higher, volume expands, looks the same on the weekly. And the Russell pushing up, almost finishes up that ABCD structure. Remember, we had nested ones. We can draw them back in again here, but we had nested ABCD structures. There was the one off the low, right, that took us up to about there. And then there was the one off of this area that was nested that took us up slightly higher. We're not quite there yet. It goes to 83. I drew that a little bit tall, is about right there. So that structure still in place, still has a little bit to go. You know, today we got up to 81.37, so missed it by about 2 points. I suspect it's going to try to tag it tomorrow and, you know, be done with it. This top up here is 84.72. It's trying to get to just over 83. So top of that resistance zone looks like we're trying to get to another 2-3 points. That's the Russell. If you look at the Russell on the weekly, again, just like the rest, stretching, volume tailing off, looks tired, not quite ready to give it up, or at least hasn't so far. So that's the S&P, Dow, all the indexes. If we pop over next to the world markets and take a look at these guys, what we're going to find out over here, and I'm going to go straight to Europe because that's where all the issues are, is over here you actually have, remember last week we reviewed this, you had a retest regen on, after 6 bars, on these two swing points that were broken. Now, for it to push through there, when the probabilities are fairly high that it would fail and come back down, you know, that tells you this thing probably is going to range trade on the way back down. So in other words, when I look at where can it come back to, maybe down to here at most, that looks to be where the retrace would try to push back to once it starts to retrace. So when I look at the CACs looks like it's going to try to pull back a little bit. This bar is the first bar, so if I'm looking at it from a perspective of support, it's right there to start with. It gets past that, it's down here. And I think it's very good probability that it's going to come all the way and, you know, range trade this area next. And so that's the CACs. CACs actually looking a little bit stronger than its sister market, the DAX. So let's look at the DAX next. The DAX has been unable to get back in to even do the retest, regenerate. That price point, it looks like it might have got there today. I think it was just shy again. 9617.59. Yeah, we're shy again. So DAX hasn't been able to get there, leaves a tail to the upside, doesn't have any volume. This looks like it's already ready to pull back. And then if we look at the strongest, which is the FTSE pressed higher today with volume, and that looks to try to press higher again tomorrow. So CACs can go either way. DAX wants to try to come back. FTSE wants to try to go up. I just saw news flash here. Brussels is saying they're going to have new sanctions decided by Friday on Russia with the Ukrainian situation. Russia, of course, is going to retaliate. It's going to push more sanctions out against them. The real question is, you know, will they hit Gazprom, right, the natural gas in Russia? Will they hit the energy sector? Will they apply all the sanctions? When they're really serious, they start applying those SWIFT bank sanctions to where you can't do transactions in dollars and you try to choke them off. That's what's laying out there. I'm sure the United States will go along with whatever's being done, and you know, Canada and other countries as well. That backdrop comes after the ECB meeting on Thursday, which kind of segues us into the OX markets and the currency. So let's pop over to those. If we look at those, the FXE looks to me like it's trying to bounce, and it's a struggle, but it is going to try to bounce here. And so it was lower again today. That low on Friday, 129.51. Today it trades down to 32, closes at 44. It's a doji. It does look like it's going to try to flip around either in front of or on the news pending on Thursday. That picture suggests that Draghi's not going to do anything dramatic on Thursday, or that's what it looks like to me. And if I flop over here on the dollar and look at it, it goes up, has a bad candle, has volume, it's pushing up to the highs, and if I look at it on the weekly, you can see it there pressing up. It's been quite a run already. The dollar, you know, the next price point looks to be about, oh, I would probably argue the top of this one, 122.30. So about 122.30, it's the intersection of these two bars. Excuse me, not 122, 22.30. So it's trying to press up there. It's at 22.09, so that would be another, you know, 0.5% or so if it can get up there. But the dollar looks pretty stretched here as well. So it appears to me that FXE is not going to cave anymore yet. As a matter of fact, let me go back to the FXE, because if we look at it on the weekly time frame, you'll see there you've extended down into this last bar, and that's probably about as far as it's going to get. So FXE looks like it's about done here. As far as commodities, gold crashes down lower, volume expands, but again, if you go over and look at the weekly on gold, it's just right underneath that big bar. That's the big test this week. 121.82 is the low. You really want to see it hold over that if you're bullish. Closes at 121.65 tonight. If you look at silver, silver closes down, gaps down, closes down again. And if you look at silver on the weekly, silver's already down here testing those lows. So the big low down here, it's trying to test 1826. It's at 1841. That's going to test there. We're going to see what Draghi does. This market also looks like it wants to try to flip around on Draghi, given the extension it already has. So everything's being pressed lower on the idea that the European Central Bank is going to do something dramatic on this go-around. I don't think it's ready, and I don't think it's going to, and I suspect that's probably going to be reflected here when it happens. The fact that the Russian situation is out there has led some support to oil recently, but today it sounded as if Gazprom was not going to be part of the targeted list. So oil presses down. It's going to test that bottom. It's coming at it with volume. Oil looks like it's going to blow that volume, that bar out and go lower. And it looks like the next stop is down here at 33.60. So another good, what is that? Another buck and dime. So that's going to press this lower. And if you look over at the sectors, the only ones that were really hit today were the ones related to the bonds and related to the oil sector. Here's the utilities. Utilities was down the most today, almost 1% at the close. That was pressing lower off of the interest rate structure, and we'll go back and look at the bonds here in a second. The other one, though, was the one I segued to here on, which is the XLE, which is of course affected by the price of oil. This is going to try to come back into, the XLE is going to try to come back into 96.67. If it gets inside that, it's coming all the way back to 95 again. So XLE pressing lower, and outside of it, the strength, while we were on the sectors, the strength was in the transports, because we had good economic numbers out again today, showing manufacturing was strong. Well, manufacturing means you got to move stuff, and if you got to move stuff, trucks go higher, airplanes go higher, trains go higher, and that continues to reflect that strength. If we look over at the industrials themselves, industrials are hanging up there. The XLI, after a big recovery, right, it's hanging up there at those highs. Now let's segue back one more time to the AUX markets and look at the bonds. And the thing about the bonds today is it was right across the board. It was on everything. In other words, if I pop in here, look at the 7 to 10 year, gaps down, right, breaks out of that swing point. Here's the high. This was the retest regen, blows right back underneath it, testing a swing point low now, trying to break trend. This at best is a range trade at this point, but it was all across the curve. That's the 7 to 10. Here's the 3 to 7, same sort of thing, blows them out. If you go over and just look at other things like junk bonds, they were down a decent percentage here, 0.31. If I look at the high quality corporate bonds, they got hit, 0.75% lower. If I look at the municipals, they got hit. It was right across the board. The only one that held so far was TLT, but it's just barely hanging. 116.69 is the low of that high. 116.73 is where it closed. They're going to try to break that tomorrow. That would also be a retest regen if it breaks. And if it does, that throws it into a range trade. And you pretty much got range trades everywhere else on the interest rate curve / bonds. So I suspect it will do the same. Okay, so that's a fairly decent wrap. What does it tell me? It tells me we ain't going to have much chance of going much higher right now, but we're not quite ready to give it up. And ain't that been the story for a while? It looks to me like we're going to hang. Bias tomorrow, slight bias to the downside probably overall, but more than likely we're going to see this market hang again. We're probably going to see, and I didn't cover the Asian markets, but we're probably going to see them try to bounce back one more night. Europe, we've already said, is mixed. We come in, we're probably going to be, even to slightly higher tomorrow, and then that will be the test. Now tomorrow we should see volume start to pick up. They come back in today, they have all their meetings, and I'm talking about the institutions, the large transactions that are going to take place. They plot their strategy. They have all, today was probably nothing but meetings. And tomorrow they're going to start implementing them, and you're going to see volume start to come in. And then the question is are they going to sell them or are they going to buy them? With everything happening, I suspect they're going to start selling some. So we'll see if that plays out that way. All right? All right, so as we go through the evening, you can always text me, 303-912-9110. support@tatoday.com if you want me to try to pick you up on email, answer your questions. I just asked for two things. Tell me what direction you're trying to trade it, and tell me what it is you're trying to do. Are you buying or are you selling? And I'll use that information to try to help you look at a stock that you want to look at or anything that you want to talk about. Okay, I had one that was emailed to me already. Let me pop in here and find it right quick. RTIX. Let's look at this guy. So let me pop it in and let's see what we got on it. Oops, let me get back to my watch list. I got happy fingers tonight. I can't seem to get them to behave. Okay, RTIX. So this looks like a biotech, biologics. And okay, so let's pull it over and look at it from here to start with. So we're up over, this is the long-term monthly chart. So we're up over all the highs now. Broke out, suspect breakout yesterday, on the month. So we have a monthly breakout, and that retest regen could take it quite a bit lower, 402 if it ever did it. So that's the monthly. Of course, that would take a while. Let's see what the weekly breaks out. Also suspect. That high is $5. And given that it's suspect and volume was a little bit stronger but not that great, it could come back and do that one. Let's look at what the daily looks like. So you had a nice spike on the daily, and that must have took out volume somewhere over here that I don't see, or a swing point that was over here, because the volume on this particular bar was greater than that one, but there had to be another one. And we could see that if we wanted to go over the trading cube, but for the purposes of this, it did get over and close over it, 545. So he's wanting to buy this, I believe. And that is a tough buy right here, but it's multiple swing point breaks on multiple time frames, so it's kind of hard to argue with it. I would just try to, you're going to have to, stops have to be up underneath here. And it's 491. So your stops have to be 480 or so. So you just have to start edging into it with the realization that you could come back that deep and that your stops have to be, you know, we'd have to look up the, let's see where it is right quick. Let's see what the RTIX, let's see what the average true range is, 0.21. So yeah, you can get away with about a 7-cent stop underneath there, and that's 491. So I'd put my stop at like 482 maybe. So I would just wedge into it, and knowing that I could pull back to 480, you know, to 490 and still be fine on all time frames. And because the weekly and the daily line up, you can trade it that way, all right? Because it really shouldn't trade underneath this now. So yeah, it's a good looking stock, and that's the way I'd probably try to trade it. Okay, let's see what else we got here. So a question on the boards from Spring Moon. How about MRD? He's thinking about shorting it. Let's see. And I assume your time frame would be short term, because we almost always do that on shorts. Okay, Memorial Resource Development Corporation. I've never heard of these people. Let me see what these people do. MRD. So this is oil and gas. 0.97, no short interest. And they got a PE of 25. Revenue growth is pretty good. Okay, so nice strong push. Let me see what the weekly looks like. Oh, so this is a fairly new issue. I get it. Okay, so it breaks out. It really wasn't 6 bars, so it still doesn't have a trend here. And the monthly probably isn't going to tell us anything. No. So you really, if you get a pullback, the most you can probably expect is here, 26.94. So now let's go to the daily again. Yeah, you don't have anything here to give you a signal yet. And 26.94 is this high. So really, the charts have it drawn out right. When you get the retrace, this is where you should expect it to try to come back to, and should find support there. So that's the first thing. Second thing is you don't have any failure yet. You got to wait on a failure, and you just don't have one yet. And the reason you don't is you haven't, you know, got a 2-bar, or you haven't played out an ABCD projection or anything yet. So it's not time yet. You got to wait. You just got to keep monitoring. 29.49, it touches the high, has more volume. This is going to try to trade higher again tomorrow. You got to get a 2-bar reversal and lighter volume after an extended move. You have the extended move, you just need the reversal. So once you get a 2-bar, and what I mean by that is you go over, back under, you have a lighter volume, and because we've already said it's extended, that should give you at least the sideways bar the next day, but probably down. And that's what you're looking for in order to short this thing. Okay? All right, let me see what else we got here. Let me check the emails and see if there's anything there. And I don't have my text with me. Uh-oh, I'm not going to be able to get text, folks. I'm sorry. I don't have my texter sitting here with me. So if you texted me, my apologies in advance. I'll pick it up for you tomorrow. And I don't see any more emails. Okay. So let's quickly, the last couple of minutes we have here, the last 2 or 3 minutes, let's talk about, again, where we are. I've talked about the fact that this market could extend for another year, 2 years, 3 years, if we do the sort of thing we did back in '99. Is that possible? Sure, anything's possible. Are we extended? Yeah, we're extremely extended, right? And the way you would get that sort of setup, and we didn't get a chance to talk about this last time, but the way you would get that sort of setup is you would get the pullback. And so let me pop back over to the S&P and just we'll use the S&P as the proxy to show how this might lay out. And I'm going to go to the weekly, and the reason for that is, you know, if you look at the cube, right, 96.4. Okay, so 96.4 tells you this thing is extremely stretched. It needs to take a rest. It's heavy on the sideways, so this is going to transition soon. It's going to be a question, does it go up or down? So what would a down look like? Well, we're already 4 bars into a push higher, so this more than likely is going to print. This is probably going to print as a swing point low by the time we get back down here, if we do. So a break of 1902 would simply take you back to the last time you had serious congestion, right? This area here. And that would be a perfectly normal place for this thing to come back to. And as you can see on the weekly, that's exactly where the support lies. That's where you would expect it to come back to. So a print back down to here over, say, the next 2, 3, 4 weeks would set this thing up for a break of a swing point low. That would allow this to transition, right? Go back to sideways, go back to zero. That would transition that. That would get you this sort of reset that you need to go higher. And then if you pull this over now and you look on a monthly, you can see that low is way down here. If you were reset back to 1902, that's basically just coming back to the bottom of 1 month's bar. That's all it's doing. I mean, it wouldn't even show up here, right? So you can see this whole trend, there would be no issue. On the weekly, you would just be back to an area here, no multiple breaks of swing points or anything. And if you go back now to the daily, you know, what would the daily do? The daily would simply bring you back in. 1902 would bring you all the way back down here, break a swing point low here, break that one as well. That would give you multiple swing point lows on multiple time frames. That would get you a little bit of a push. But it's still, more than likely, the way this thing would have to come back is it would come back in stair steps. In other words, if we were to fell up here and come back down kind of hard, maybe we come into this support zone first, get a bounce out of here, get another one, right? Come into these, get a bounce out of there, get another one, takes you down to here. You can see how that plays out. That's the sort of thing that could give this thing over in the next year or two something larger to work with. And you know, now's as good a time as any. It's September. September's usually a tough month. So is October. So, you know, maybe that's what's going to happen. Right now, it certainly don't look like it, right? There's nothing telling us it's going to. We've got to get some failures, just like we looked at that last stock. You got to see a failure before you can even begin to think about that stuff. But I'm always looking at what could transpire, what needs to transpire, both on a shorter term basis and what it would do for you longer term. Intermediate term time frame needs to reset somewhere along here sometime. I don't think we can go until the end of the year without another reset of it. It's gonna happen here somewhere. I would prefer to see it happen now, but then again, you know, the market isn't asking me, so we'll just wait and see what she wants to do. But keep that in mind, because that's very possible. You know, 100-point drop here, people would freak out. It'd be 10%. I don't think we've seen 10% in 3 years. But you know, that's the sort of thing that needs to happen. We'll see if it can or possibly will happen. Folks, I'm going to leave it at that. This is Tuesday. 2 shows left the rest of the week, of course. Back on schedule. I had a nice holiday. Hope you did. Thanks for joining me. Tell a friend, tell two. I'm LA. This is, and it was, your daily NeoTA wrap. Have yourself a great night, and I'll catch you next time. Good night, folks.